You are watching Market Watch, the brief overview of the key events from the world of finance. After a slight corrective decline in the U.S. stock indices, buyers returned to the market. Their activity remains moderate due to the expectation of the results of the vote on the Fed's key interest rate. But it is also noteworthy that we are witnessing a strengthening of the U.S. dollar paired with most currencies, which in turn is accompanied by a moderate increase in government bond yields. That's right, there is a simultaneous growth of risky and protective assets. Such a situation is not uncommon when it comes to short-term price fluctuations. But in this case, we are witnessing a continued growth of assets that perform a completely different function. For example, gold has increased in price by more than $350 or 20% since the beginning of October 2023. This is a strong growth in such a short period of time for a defensive asset. Over the same period of time, the S&P 500 index has strengthened by more than 20%, which is difficult to call short-term price fluctuations. And you can say as much as you like that this situation will change very soon, but it lasts almost 6 months. Throughout this time, a huge number of professional investors have been taking risks by buying shares of the largest American companies. At the same time, they do not forget about hedging risks when buying gold. There is at least one logical question in all this: why suddenly investors have enough money to stimulate the growth of all markets, starting from stocks, commodity assets, and ending with cryptocurrencies? The answer is obvious: too much money was printed at the time of quarantine. Therefore, we can assume that tomorrow we will not hear clear evidence of the Fed's willingness to cut the rate in May. But even in this case, the market may remain in the green zone or at least not fall deeply. This scenario takes into account the extremely restrained and without any specifics comments of the head of the Fed. And in conclusion, let's talk about the cryptocurrency market. Bitcoin fell below 65,000, increasing the likelihood of a more powerful corrective wave of decline. Investors' caution, which is caused by the upcoming vote on the interest rate of the U.S. financial regulator, may lead to the development of a deep correction. However, we are not talking about a global trend change, because only the development of the recession in the United States will lead to a collapse of stock indices, thereby provoking a long-term sell-off in the cryptocurrency market. But there are no obvious prerequisites for the development of this scenario. Therefore, the bullish trend is a priority. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.